Hey guys, it's Caroline here from the Junior Prelinks Accounting channel, and today I'm going to go through a limited company versus a sole trader setup. So I've already done limited versus umbrella, and this one's going to explain the difference between limited and sole trader. Now, I'm going to briefly talk about how each one is set up, just so you kind of know the structures of them. Then I'm going to go through the pros and cons of each one so you can decide for yourself which one fits best for your own circumstances. And I'll also go through some practical examples of how the taxes work with each option. So again, all of this information will help you come to a decision at the end of, wow, limited works best for me, I'm going to go with that, or I'm going to stick with sole trader. So let's get started. I'm just going to jump into my computer here in a second so we can actually see what's going on between the two. So in this little presentation I've put together for you guys, we're going to go through limited company versus sole trader. So what is a limited company? It is a private company, so it's not going to be listed on like a stock exchange or anything like that. It's basically your own little bubble company that you run internally. Then it's normally limited by shares or the amount invested. There are other ways to limit it, but this is the most common. And what this means is when you set up the company initially, often you'll just have a £1 share, especially if you're the only owner of the company. And that money is basically if the company goes bust and it can't pay anything basically and it needs to shut down, you've lost £1 and that's it. Obviously, this is very useful and I'll get into that in a minute. So owners can receive profit after tax in the form of dividends. This makes it very tax efficient, and you also have separate legal entities, so you're not personally liable for debt unless there is a clear negligence by the director. And what is a sole trader? So it's a single self-employed person running a business. It's very simple. There's no shares, there's no limit of liability, and there's no separation. So basically, if the company has debt, it's your personal debt as well. So you're personally liable for things. All the company profits also treated as your personal income, so there's no separation. It's just you are the business yourself. Anything happens, it's personal tax basically. Sole trader pros. So first of all, it's easy to start, although you do have to notify HMRC when you start trading. The accounts are really simple to complete. You don't have to submit anything to like Companies House or anything like that. And the only legal filing requirement each year is your self-assessment. Obviously, there are certain rules that you need to follow, just like with limited companies, in terms of what expenses are allowable and so on. But these are normally more simplified and easy to understand. And it can be tax efficient with low profits. Basically, there's not going to be a huge benefit in you opening a limited company compared to sole trader if your profits are low, but there are other advantages that I will get into here in a second. Sole trader cons, so there's no legal separation between you and the company. Again, company debt is your debt. So if you mess up the company, you're also just screwed, basically. You're going to have to pay for that. Assets are not protected, again, because there's no separation. Personal liability for debts. All company income is treated as your income, so it's not very flexible at all in terms of what you can take from the business. So if you're turning over a lot and your profit is high, you're forced to take all that income, whether you want to or not. With a company, you have the option, it can stay in the company and you can take it. You can take however much you want when you feel like. So the higher your profit, the less tax efficient it becomes, which we'll see here in a minute as well. Limited company cons. More complex legal requirements for accounts and returns, but these are problems that are easily fixed with an accountant. Director's responsibility to ensure company tax is paid on time. So again, this is where the whole negligence thing comes into play. If you're obviously making bad choices where your company can't pay its tax as the director, such as taking dividends when you shouldn't, which is considered a loan from the company, and that's preventing your company from paying tax, and then your company needs to get shut down because it can't pay its tax. HMRC could potentially chase you personally because of negligence, so you just got to be careful there. Set money aside for personal tax, more discipline required. So, I mean, yes, it is a con, but also as a sole trader, you often will have a tax bill as well, unless you're doing something like CIS where your tax is already deducted, so you don't have to worry about it, that kind of thing. So yeah, But again, accountant will fix this stuff for you because you can predict what the tax will be. Disclose company information on the public register. So yes, there are certain details displayed on the public register for anyone to look up, basically, with your company name and number. So the first things first is the registered office address. You can use a service to keep your personal address off the public record. And yes, you will need to submit accounts to Companies House, and those will be displayed. For micro companies, we only need to submit a balance sheet, so that's very limited information that someone could actually see about your company, which is not a big deal at all for most people. And you need to pay for an accountant. Oftentimes you need to pay for one with sole trader as well, but the fees are normally cheaper because, again, legal requirements are much lower. At the same time, having the accountant will ultimately make your life way easier and prevent costly mistakes. So it's kind of like a con and a pro at the same time. Limited company pros. You can get tax efficient pay through salary and dividends. You can be flexible with how you pay yourself. So for example, if you're happy with the amount you've taken from the company, you really don't need that much income, you'd rather leave the funds in the company to invest in something else, such as you could pay money into your own personal pension scheme or private pension scheme. Your company can do that with tax relief. You can also choose to invest the money elsewhere and keep the money circulating within the business rather than withdrawing it and paying the personal tax on it. Limited company is a separate legal entity, so there's separation of company and personal debt. Again, you've only got the £1 share in there. That's what you lose if the company gets closed down. You have more credibility with clients, so it's like an actual company incorporated on Companies House. They'll see you've got more responsibilities to take care of, you're actually taking it seriously, that sort of thing. You could ask for higher pay as well. You have protection of your company name, so because it's already registered on Companies House, no one else can take your name. If it's a big deal for you and you want it to be like an international brand, just check in some other places to make sure it hasn't already been taken. But in the UK, it'll be protected as its own company name. You've got the ability to add shareholders for funding. They will obviously benefit from that investment because you'll have to pay them dividends based on how the shares have been set up. They will also have voting rights in your company, so you'll just have to be a bit careful with who you let into the company because they essentially own it now. So anytime you want to keep full control over your own company, never give more than 50% of your shares away. You always want to have 51%. Of course, if you're a husband and wife company and you have no problem splitting the shares 50-50, that's fine. So each of you can have £1 share in the company. And then you have an asset that can be sold later if you wish. You could potentially do this with sole trader, but it's going to be much harder because there's no separate legal wrapping around the sole trader. It's basically you as the person, an individual trading. So with the company, you've got a physical asset you can actually sell to someone and they can take over it. So these are the big pros of a limited company. Now on the next page, you'll see basically income and profit comparison for the 2019-20 tax year. On the left, we've got sole trader here. You won't see a huge tax benefits with this amount of pay. And essentially, I'd recommend setting up a limited company if your sole trader income, so the profit your company is making as a sole trader, is £15,000 to £20,000 a year. You can do it with less, of course, as long as you're happy to do the accountancy side. So, for example, accountancy fees are always higher with a limited company. However, if you want to benefit from having the separate legal entity, from protecting your assets, from having the company name saved and all of those things, you can set up a company from day one and it's not a problem as long as you do the company accounts, because they will, Companies House will shut your company down if you don't do confirmation statements and company accounts. I wouldn't recommend starting with a limited company if you're not prepared to pay out for an accountant, is the only thing I'd say. So on 120 per day pay, or about 30k turnover, let's go with that. So I'm basing this on a fully working year of 240 days. And also the fact that you have recently set up flat rate VAT scheme and you're a limited cost trader, so your costs are not high enough to have your actual flat rate percentage. Instead, it's the basic rate, 15.5% in the first year. So you have the flat rate VAT gain here, and you've also got the same expenses going through, so like the phone, travel, supplies, all the same, apart from accountancy fees, which is, again, because of the limited company, they are higher. And you've also got use of home allowance, which is a special allowance for limited company directors. And then you've got salary here. So your salary is an allowable expense for the company. And this is a ballpark figure of the salary in 2019-20 that is most tax efficient for single directors. But of course, if you add your wife onto the company and she's working for it as well, you immediately can start running both of yourselves higher salary than this. Sole trader, you can't do that. You'd have to set up a partnership and it becomes a bit complicated, and honestly, once you start getting into partnership territory, you might as well go limited. So we've got the profit figures for both of them here. 26,400 for the sole trader and 16,900 for the limited. So these are the class 2 and 4 national insurances you'll need to pay. Personal tax, take home pay is 21,900. Here you've got the profit figure for the company, which is essentially what's available as dividends. You've got the salary as well, which you took from the company, and you've got the 216 use of home. I'm including this as income because you would have spent it either way, so you're extracting this extra money from the company essentially for free. And then you've got personal tax here on the dividends, and what's left is 21,984, and the sole trader has 21,900, so it's only about £100 difference for the year. Not huge tax savings, but keep in mind the accountant's fees are a lot higher, and also the tax figure is a lot lower. It's almost exactly the amount of the accountancy fees have increased by. Again, the limited company gives you other benefits than just a bit of extra profit. It gives you that protection you want for your finances. Example 2. So here we've got a bit of a ridiculous example because no sole trader would be, they could definitely turn over this amount, but if they're making this much profit, like 105,000 profit, it would be not very smart to continue as a sole trader. And you'll basically see why here in a minute. Not in a minute, you can see on the screen right now. So again, taxes and national insurances, and you're left with about 40,900. Limited company has all the same expenses. Again, accountant's fees are a bit higher. The accountancy fees here are higher because this would be a more complex case for sole trader work. Regardless, it's got way more money going through it. And I've also included a pension contribution in this case of £40,000, which is your maximum allowance per tax year. And this pension contribution saved both examples a lot of tax money, which I won't go into just now because it is a bit complicated, but trust me when I say a lot of tax money was saved with this 40,000 contribution. It essentially raises your lower rate tax threshold, so you don't pay higher rate taxes until way later. And with the company, you get full corporation tax relief on that contribution. So again, you've got the salary, you've got the dividends, you've got the use of home allowance, and finally, you've got your take-home pay of £50,480. And on the sole trader side, you've got the profit tax, again, take-home pay of £40,900. Pension contribution here has been deducted because you paid for that personally. That is no longer your take-home pay. So almost £10,000 less tax going through limited, which is always nice. And almost £10,000 more income. So as you can see, these have evened out a lot more because the accountant's fees are more similar. But once you start getting into these higher earnings thresholds, the limited company really wins because you don't have to take all of these dividends here. You could choose to take 30,000 in dividends and save yourself quite a bit of tax money by doing that. So what you see here is like a separation where you can choose to keep the money in the company rather than taking it all out as income and just getting taxed ridiculous amounts. So when it works for a limited company, you take action and set up a company. Well, that's not too different to actually notifying HMRC of your trading. If you go with an accountant, such as our accountancy services, we'll do the limited company setup for free as part of our monthly service. Use accounting software for expenses, banking, and invoicing. Very easy to do this. It'll save loads of hassle when doing your accounts and things like that. So this is kind of mandatory really for limited companies. You don't want to be messing around with these things, and obviously definitely keep track of expenses because they always reduce your corporation tax. As long as they're allowable, of course, you can't just put anything in there. But fortunately, we'll let you know if there's a problem. So, budgeting for quarterly dividends. Yes, HMRC prefer that you take out quarterly dividends, but you do have the option to take monthly. Just make sure that when you do take the dividends, they're separated from your salary each month. So HMRC doesn't just decide that all of the income you're receiving from the company should be taxed as salary. That's not a good scenario to be in. And finally, get an accountant to help with drawings, advice, payroll, legal, filing, all that stuff. Basically, all the difficult things to do with limited companies when you compare it to sole trader. An accountant will help massively, and all you have to worry about is updating software when it doesn't work. So you take out all the money from the business account, leaving none for tax. This is a huge problem because, again, this could be considered negligence by HMRC and they'll chase you personally, which is no different to a sole trader, so make sure you don't do that. You don't keep track of your expenses and save receipts. This makes it far less tax efficient, but it would essentially be the same with a sole trader if you didn't do that. You just get taxed on all of your income regardless and nothing to reduce your tax bill. You don't stay in touch with your accountant. Obviously, this can create many problems. And your income is too low. Yeah, so if you can't afford the accountant, it's probably not a good idea to go ahead and set up the limited company just because you are going to need the accounts to be done. So 15,000, again, like I said, 15 to 20k profit as a sole trader. At this point, it's definitely worth switching your business to a limited company because you are starting to make some money and you want to protect that money. More security for your finances, all the hassles taken away with a good accountant, and you get to pick when and how to take money out of your business. So again, you get the flexibility, you also get the protection. There's really no reason not to switch at this point. And the choice is yours. So would you pick a limited company or would you pick sole trader? So you want to protect your business and save money, or you want to keep things simple but pay more tax. And it's really not that simple as a sole trader, to be honest, because you will have to still keep track of your invoices, keep track of your expenses, and essentially you will likely have a business account that you want to look through to do these things. At the end of the day, it's the same with a limited company if you have a good accountant. That's the only difference. The gist of it is, if you can pay an accountant, then set up the limited company. It's overall better. But of course, you are a free being and you can choose whatever you want. It's not my business. I'm just telling you there is a better option. Thanks so much for sticking to the end of this video and watching my sole trader versus limited comparison. If you did have any questions, feel free to leave them in the comments down below and we'll get back to you as soon as we can. Otherwise, you can visit our website, www.juniperlinks.com, which should be on the screen as well for you in case you can't figure out how that's spelled. And finally, hopefully we helped you answer the question of whether a limited company or a sole trader is better for your personal circumstances. Don't hesitate to hit that subscribe button if you're interested in more accounting video help, because we will be posting on here regularly. And also go ahead and click that like button if you found this helpful. Thanks a lot for watching again, and we'll see you again next time.